Let's get in Sanjay Lalbhai, CMD of Arvind, to tell us how is the space shaping up on the exports front, particularly the textile exports. Mr. Lalbhai, good having you. Thanks so much for joining in. And that's precisely my question. Everybody's bullish on the export theme, rupee at 62, so things should be well. But November trade numbers show exports at 5-month lows. For textiles, how have the things been in the last couple of months?
I think exports have been quite strong. If you look at the entire value chain, yarn exports are up by 20% from April to September data. The clothing exports, garment exports, are around 15 to 16% between April to September. November may be an aberration, and we can't really look at monthly numbers to judge a trend. But otherwise, exports are doing pretty well. Fabric exports are up by 5 to 6%.
Mr. Lalbhai, morning. It's said that for FY14, we could see textile exports touching about $17 billion. Is that a workable number?
I think we are expecting the textile and clothing to close at around 38 billion, up from 34 billion this year. So that's the kind of growth which we are expecting. I think the advantage of depreciated rupee has started giving a momentum to the exports, and the disturbed situation in Bangladesh is also helping the garmenting business in India. So I think it will take a while, but I think overall the exports should do pretty well for textiles and clothing business.
So from 34 billion to 38 billion would be around a 10% or 11% increase for the current year. You think that momentum can continue or better itself in FY15?
I think it should improve, because we are now expecting that we should grow by 15 to 20% year on year. So I think next year should be a much better year.
And I'm sure that it's not a linear growth for all companies. I mean, leaders typically tend to have a larger share of the overall industry pie. So for Arvind, is that the 15-20% that you're talking about, is it for Arvind or is it for the industry, and Arvind will get a disproportionate share out of that 15-20% growth?
No, I'm talking about industry. Arvind will grow depending on the kind of capacities we build, because we are operating at 100% capacity utilization. So we can't really grow our exports beyond what we are doing already unless we add capacities. And we intend to add capacities we are doubling our garmenting business. So from 15 million garments per annum, we are going up to 30 million garments per annum. So that should give us a very sizable kind of export growth.
We understand that you're also targeting a good 40 to 45% growth for the full year in brands and retail, and also that this festive season most sales were at full price. Is this going to be a segment to reckon with? What is it that we can expect in the next 2 to 3 years?
I think brands and retail is our major thrust area. We will grow at around 700 to 800 crores every year for foreseeable next 2 to 3 years. And we will be closing at around 2,000 crores this year. So I think 800 to 900 crores growth every year for the next 3 years is what we are planning.
Okay. I just want to bring it back to the reply that you gave me on the last question. So when does the capacity expansion or the expanded capacity kick in? Would FY15 see a large chunk of that benefit coming to you?
Substantial part of it. Some of the capacities are coming in the first quarter of next year. Some capacities, all the capacities will start from the third quarter. So I think we'll see a substantial benefit coming through in the next 14-15, year 14-15.
What percentage of your overall business contribution comes from this segment, Mr. Lalbhai?
Currently it's 45%, and it will continue to be around 40-45%, because our brands and retail is a domestic play, and that business is growing at 45%, whilst our textiles and clothing will grow at around 15 to 16%. So on a much larger base. So I think we are almost planning 700-800 crores of growth in brands and retail, and 700 or 800 crores growth in garmenting, textiles and clothing. So equal kind of numbers for the next couple of years.
Okay, so suffice to say, before we wrap up this interview, suffice to say, and I won't hold you to numbers, but just from what you giving me the flavor, the capacity expansion and the way the currency is shaping us up as well, FY15 will be a much better year for you than what FY14 will be.
Yes, I think, the higher EBITDA contribution or margins will come in on the expanded capacities. So if everything was to remain equal, then we should improve our EBITDAs and the bottom line. So we are quite bullish about our next couple of years.